Hello and welcome to our crop insurance update series. My name is Jessica Hamill and I am a team leader on the crop insurance team for the east side of Missouri. Today I am here with Sadie Conley for the first part of our three-part update series. Sadie is a vice president for our crop insurance team with over 9 years of crop insurance experience. She currently services customers out of our Columbia and Macon offices. Today, Sadie will be talking with us about SCO and ECO options. Sadie has been discussing these options with her customers for several years. Sadie, what are the SCO and ECO options, and why should producers be taking a look at them?
Thank you, Jessica. So today I'm going to be addressing a common question that I've been getting from a lot of my producers over the last couple years, but especially this year for 2025, which is how can I boost my coverage going forward? So this slide is going to show our total cost of production per acre from 2021 through 2025, projections in 2025. So as you can see, there's several different commodities listed here, but we're going to primarily be looking at corn and soybeans today. So obviously we've got the highs in 2022 and 2023, but you can still see that this cost of production has remained elevated for 24 and 25. This isn't something that's new to you guys. This isn't news to you, but this is just something to put that into perspective, that our cost of production has remained elevated. And then with that, our prices that we're receiving at the elevator continue to decrease. So this slide is showing our corn and soybean projected and harvest prices that are used to set our guarantees for our crop insurance. So for those of you that are maybe unfamiliar with insurance or just need a refresher on where these prices come from, our projected price is our February average of December corn and November beans. So we're right in the middle of that discovery period now in February. So those will be set in March for 2025. And then our harvest price is going to be the October average of our December corn and November beans. So you can see here that the green is our harvest price, the blue is our projected price. So you can see how these have trended since 2011. Something interesting to note here is that on the corn, we've only seen 3 years since 2011 where that harvest price has come in higher than the projected price. And then with beans, it's very similar. We've seen 4 years since 2011 where that harvest price has come in higher than the projected price. So obviously there's some variability here throughout the years, but you can see over the last couple of years, we've had a decline in price. So with that, a higher cost of production, lower prices that we're receiving at the elevator, and lower prices on our crop insurance guarantees, we're looking for ways to increase our coverage to kind of offset that. So that's when we're going to dive into SCO and ECO today. So SCO and ECO are not new products. They've both been around for years. SCO, which is supplemental coverage option, I know that's been around since I started. ECO is a newer product, but it's still been around for the last couple years. But ECO, we've seen a change that's going to be making this product more favorable for us going forward. Our premiums are going to be cheaper, and we're going to talk about that here in a couple slides. But just to give you an overview of how SCO and ECO function, they are area-based plans of insurance that we can add on top of our multi-peril product. So if you look over here to the right, this visual to the right, you'll see in this example that this person has a 75% coverage on their multi-peril policy, which is the yellow. So we're going to be covered up to 75%. And then SCO and ECO come into play with your deductible. So they're going to cover a portion of your underlying deductible. So SCO is the blue. So SCO is going to cover you from where your multi-peril coverage ends. So again, 75% up to 86%. And then ECO is going to cover the top end from 86%, where the SCO ends, up to 90 or 95, depending on which coverage you choose. Again, so these are going to be area-based plans of insurance. So we're going to be looking at county yields, not the individual yields that you receive on your farm. So with that, we're going to be looking at our county expected yields, which is what these policies are going to be based off of. So this slide is showing corn. So the left is going to be our non-irrigated corn, and the right is going to be our irrigated corn. So this will give you your numbers for your specific county within Missouri of what those expected yields are. So these are using RMA data. So therefore, this should be pretty reflective of what producers are seeing in their specific area. One thing that's important to note here, especially on the irrigated ground, is that there might not be enough producers within that area that are using irrigated practices. So therefore, they're going to pull that data from surrounding areas. So for example, I cover Adair County, which is up here in northeast Missouri. I can't quite read that number. I can't quite read that, but it's in the 190s in Adair County. And so where those numbers are coming from is they're using 21 different counties, including 4 counties in Iowa. So definitely keep that in mind when you're looking at the irrigated yields, especially. And then this next slide is going to be your soybeans. So same thing, RMA data, and then also surrounding areas. So I would highly encourage you, if you're looking at adding on ECO or SCO, to look into what your expected county yields are and just see where your individual yields trend along with the county. So this could be a really good product, a really good fit for you if you trend with the county or even above the county. This could be something that could really work in your favor. So the coverage is going to follow what your underlying multi-peril policy, how it's set up. So if you have a revenue protection policy or a yield protection policy, I would say majority of producers are going to have the revenue protection, which is where you're using both prices. So you're using the projected price and the harvest price. We do still have some producers on yield protection, so that is only going to use your projected price. So if you have yield protection and you choose to add on ECO or SCO or both, then you're only going to be using that projected price with those options. The coverage is also going to be based on your underlying policy liability, and those claims are going to be triggered based on the county performance. So I know I've harped on that. It is county based. So claims are going to be triggered based on county yields and what those come in at. But if you have a claim that's triggered, your payment is going to be based on your underlying liability. So for example, if everyone in Boone County who has ECO insurance and they have the 95% coverage level, they're all going to trigger at the exact same time, but their payments are going to look different. And that's because your payment is based on your underlying liability. Something else that's important here is that these claims are going to be paid the fall of this following crop year. So if you choose to add on ECO or SCO in 2025, you are not going to be paid on a claim until the summer of 2026 if you are due one. So that's something important to note. We have to wait for those county yields to be finalized before they can pay on those. And then just some other important things we wanted to point out with the ECO and SCO is that your sales closing date is going to match your underlying policy. So that's going to be March 15th is going to be the deadline to add on either of those products. You can purchase SCO and ECO together because those coverages don't overlap. And then along with that, you can also choose one or the other. So obviously, if you choose to just add the ECO, so just that coverage on the top end, you are going to have a gap in coverage between where your multi-peril policy ends up to 86%. So keep that in mind if you're picking and choosing one or the other. And then this is the big change here that I kind of touched on at the beginning is our ECO subsidy rates are increasing. So in 2024, those were 44, that subsidy rate was 44%. That is increasing to 65%. So that's a pretty significant jump there. So SCO has always been 65%, but now ECO is going to match that. And we're going to look at premiums here on the next slide to give you an idea of how those have changed. And then you cannot have both SCO and ARC County at the FSA office. So if you choose to elect SCO, you have to have PLC at FSA. When it comes to ECO, if you choose to add on ECO, you can have either ARC or PLC. So also something that you definitely need to take into consideration if you're looking at adding SCO. And then finally, we're going to look at premiums. So these are going to be corn premiums. The left is going to be our 2024, and then the right is going to be 2025. So something to note here is that we've got several counties. Hopefully this will be representative of your area. I think we tried to choose counties across the state of Missouri. These quotes are using the county T yield, which are listed below each county. Obviously, that's going to change on your individual quote because you're going to be using your APH. And then these are 75% coverage level, enterprise unit structure. So keep that in mind when you're looking at these in comparison to your own premiums. But the blue is going to be that multi-peril policy premium. And then the red is going to be the SCO premium. So you're not going to see a huge change between 24 and 25 on those. But whenever you're looking at ECO, which is the green, there is a pretty significant change in premium there. So that's why, ECO is gaining in popularity. It's why it's a hot topic of conversation this year. It's something that's much more affordable, something that you might not have looked at in years past, but now it's something that you could really consider adding on to your policy. And then finally, we're going to have our net payments across the Midwest. So on here, the darker green is going to be representative of higher payments within that county. And then obviously it decreases as we go into the red. So these are net payments, and these are on corn and soybeans. These are net payments, and so your premium is going to be deducted from these payments. So we're thinking, especially if there's any widespread loss in the future, that we're going to see some more green added to the state of Missouri because those premiums are going to be cheaper with the ECO subsidy increase. So this will just give you a good idea of how those have paid out, and these graphs are showing 2015 through 2023. So. And that's all I have for you today on ECO and SCO.
Thank you, Sadie. If you have questions about SCO or ECO insurance, or if you would like a review of your crop insurance policy, you can find your nearest FCS Financial crop insurance agent at www.myfcsfinancial.com/insurance. I want to take this time to also remind you of a few other changes that are affecting Missouri. Beginning in 2025, organic producers are eligible for enterprise units. Enterprise units must be elected on your application, so if you would like that option, please reach out to your agent. In addition, a change has been made to $200,000 reviews. Beginning this year, RMA will add indemnities from prevent plant, harvest losses, and ECO/SCO payments. This means that some producers could be pulled for an audit in the summer following harvest of that crop. If you receive a $200,000 audit, you should prepare your production records, such as settlement sheets and bin measurements for the last 3 years. Since we are in tax time, I also want to mention that some insured providers are only sending 1099s for losses over $600. If you have questions about a past year's claim, reach out to your agent and they can give you a total paid on the claim. RMA has issued new language in respect to minor policies. A minor can no longer share crop with any member of their household or an entity that contains a member of the household. In addition, additional documentation must now be submitted with a minor policy. If you are a minor with a crop insurance policy, please be sure to review your paperwork with your agent to make sure you meet the new regulations. We are anticipating a new option for corn and soybeans in the 2026 crop year that we believe will have a September 30th, 2025 sales closing date. If you are interested in adding additional coverage to your policy, keep your eyes out this summer for more details. Last, with cattle prices at an all-time high, I want to take this opportunity to remind you that FCS Financial offers livestock risk protection insurance. If you are interested in protecting your cattle against a decline in price, please reach out to an agent. Once again, that contact information can be found at www.myfcsfinancial.com/insurance. Thank you for joining us for the first video in our 3-part series. I hope you'll join us for parts 2 and 3, where we will discuss changes for new break ground and the addition of insurance for double crop soybeans in many counties in Missouri.